Welcome, everybody. I hope you guys are having a good Thursday today. Welcome to the Cigar Lounge, the second annual Cigar Lounge of the year. I have great news and bad news. I'll do the bad news first because it's not anywhere near the great news. The bad news is I have secured a really good cigar lounge spot. For those of you who don't know, I actually go to the cigar lounge. That's where I do a lot of work during the day. But I had a problem I was running into. People like to talk at the cigar lounge, and you're not going to believe it, but sometimes what they're talking about doesn't match what we want to talk about. So while I would be sitting here talking about like iron condors or talking to my friend from navigation trading or something like that, you might hear something about how the president should be in jail or the past president should be in jail. And it's fun and it's entertaining, but it also makes for hard iron condor discussion sometimes. The good news is I have secured a location, I think, where the cigar lounge will continue. And it's actually still at the cigar lounge, but in a little more VIP room. So I'm excited that that might be in the works. But for today, we're in an undisclosed location, which is beautiful. Have a beautiful lamp behind me, but I cannot smoke in. So imagine me smoking. Use an image in your head of past me smokings, and just know that I would like to be smoking a cigar right now. So, with that being said, that's the bad news. The good news is we have an awesome guest today. So this is the first iteration of what we're going to do for a little while. We're going to start having people on that we trust in options education. And I've been doing this for about a year now, and Matt and Rusty and I, and we can tell you that not all option educators are created equal. Some of you have come via the internet. You never went through like an options training course. Some of you guys have come via some of our partners, which navigation is one. And so we thought it'd be a good idea. There's such a wide variety of people in the room who use all sorts of different techniques and different strategies. We thought it'd be cool to have segments on the Cigar Lounge where we have some of our partners come and just talk a little bit about who they are, what they do. And the reason for that is A, we can always learn together. B, we have a lot of trust for the people we work with, that they are trying to steer people wrong. And we don't work with everybody because of that. And then three, it's just, this is such a good place as a melting pot. We're not like an advisory service. We don't give option advice. And so we want to kind of leave it to the experts to talk through things to teach you, basically. Obviously, they're educators in the room just by their very nature. I believe Wizzy would be considered one of them. But we thought it'd be wise to have people on that this is what they do. They teach options. They train people in options. And we trust them in what they say. And so that's a long-winded thing to say. We're going to have navigation is the first, and we're definitely honored to have him on as the first. And we will be having some more that I'll be scheduling here pretty soon and letting you know. So with that being said, Mr. Navigation Trading, yourself, can you hear me?
I can. Can you hear me okay?
I can. Thanks so much for having us on. Everybody in the chat, wave to Navigation Trading. I don't know how the wave emoji works, but if you can do it, do it. I'm going to give you a quick little backdrop of navigation. So I've been trading options since maybe 2017, 2018. And there are two people that, in my mind, were the first that kind of took me from the theory of options to the actual like putting on of trades of options. And one of them we will have on next week, actually, but the other one was navigation trading. And I'm gonna let him give a little bit of a bio, but I just wanted to just give an immediate shout out that they are old school OGs in the options trading space. And there's a couple things I like about them. And again, this is not something, like I don't do commercials. Obviously, you might think to yourself, like, why not? You have the face for it. You could be great. Thank you I appreciate that. But I'm not a commercial type of guy, so you can trust what I say that there's two things I love about navigation, and I'm just going to say it straight away. One is you can see in real time that they adapt to the market. I've watched through the years that their courses and how they trade changes. And that used to, I've heard people say that as if it's a red flag, but that's the complete opposite of a red flag, because if you've back tested it all, you understand that's exactly what we're doing. We're applying the scientific method to options. And so uh, I love the fact that he has adapted strategies over the years. So that's the first big one, is that they are constantly learning, they're constantly teaching what they learn, and they're constantly going from there, which I love. The second thing is he actually posts a performance. And Steve, I don't remember. Do you do it monthly or is it quarterly?
Yeah, once a month after the end of each calendar month.
Yeah, and I'm gonna. This is kind of like inverse praise a little bit, but again, just bear with me because I don't like BS. And so he posts his losses, and I'm gonna be completely honest. There are not a lot of people who A, post their trades at all, but B, post their losses. And that, to me, when you combine that with someone who's willing to learn and say they're learning and try new things as an educator, that builds a lot of trust with me. And so, anyway, just wanted to say thanks for that. I appreciate it. I'm done talking now. That was Troy's rambling. And so here we go. Steve, I hope you're doing good. Here's my first question for you. Who are you? Where are you?
Yeah.
What?
Well, again, thanks for having me, Troy. I appreciate it. I've really got, enjoyed getting to know you, and I've spent some time in your Discord, and it's been a great experience just using your software. And so kudos to you and the team, first of all. Uh, who am I? So I'm in Kansas City, Missouri, and just a little bit about my background. Um, I started trading back in 1999, right before the tech bubble burst. And it was primarily just trading directional futures and stocks and things like that. And then I never really got into options for about the first, I don't know, 5 to 7 years, just because, I heard all these scary words like delta, gamma, theta, vega, and it just kind of made me shut off and not want to go down that route. And so it was all more directional. And then eventually I got into delta neutral type trading and learned some different strategies, the calendars, the iron condors, all the fun stuff that we typically start with. And I was sitting, I think it was 2014. I was sitting at our Thanksgiving with my brother, and we got to talking about trading and investments, and I started showing him what I was doing, and I was showing him, I think at that point I was up like 60% for the year, and it just blew his mind. He's like, yeah, I can't, my mutual funds are down 7% or whatever it was. And so we just kind of got to talking, and he's like, why don't you teach other people to do this? And I really never really had that inclination, but he owns a video production company, and he knows how to do all that stuff. He knows how to set up websites and stuff. I don't know. I still don't know how to do any of that. But so he kind of took that lead and showed me how to record on a screen. And I posted my first course with navigation trading on Udemy, which is just a platform where you can go and learn anything from yoga to trading to computer programming to all kinds of stuff. And just got a ton of interest and people wanting to learn more. And so I created a class on calendars, and I just kept kind of, teaching people what I'd been doing. And now, we have, I don't know, 20 plus courses that we've done since 2016, and have just continued to, like you said, just kind of evolve to the market and find new ways to, find edge and be profitable and manage risk and all those, different things that we do as traders. So it's been a pretty fun ride.
That's awesome. What was that first course on Udemy? What were you doing in that course?
It's iron condors,
Nice. And
just
is that
basic,
some
just
just
basic,
a
uh,
hell of a
30 to 60 day iron condors.
yep. Love it. That I feel like Condor. I mean, if I asked anybody in the room, Condors, I feel like would have to be one of the most kind of beginner friendly things. I know certainly that was one of the first I'd ever heard of, like an option strategy and things like that. From that Udemy, not having your own stuff at the point of like posting it to a third party. What was that like, kind of getting feedback and things like that? Would you just have, I've taken some courses in Udemy, but would you have like feedback via email, feedback via messaging and things like that?
Yeah, I would. I mean, I didn't even have an email. I mean, I had my
Okay.
personal one.
Yeah.
So I posted that out there, and I just said, hey, if you guys have any questions, feel free to email me. And,
I got
but Udemy has their own messaging system, so I would get messages through that, and I would answer them, and I really started to reach out to folks as well, and just say, hey, I just want I want your feedback. Is the way, mostly because I was trying to figure out, is the way that I'm communicating this effective for you? I mean, are you following? Is it helpful? And so I started getting a lot of feedback that way. And then overwhelmingly, I started getting asked, hey, can you like start posting your trades, which, on a platform like that just isn't possible. And so that's when navigation trading was really kind of born. So we, figured out, what we could do as far as, sending out messages whenever we posted our trade, whenever we took trades, and then it just kind of grew from there.
So you were, I have to imagine that is a pretty sweet experience to like put yourself out there on a course like that, um, get really good feedback. I have to imagine that gave you a lot of confidence, like moving forward of like, okay, this is material that people. But I mean, having taken your courses, you explain concepts very well, and you break it down into very manageable chunks, which I think is important with any teaching. So I just have to imagine it was a very cool feeling of watching people be like, yeah, I get this. I understand something I didn't understand before.
It was super cool, and it was literally from the day that I posted. I recorded all the lessons, we posted the course, and literally, within a couple days, people were signing up for the course. So I was calling my brother. I was like, "Hey, did you see this? We already got 5 people. We
That's
already
awesome.
got 5 students watching
Yeah,
our course. Can you believe that?"
yeah,
It was kind of cool. And then it just, I mean, it really just took off. And I was like, wow, there's really an appetite for people wanting to learn this style of trading, and so it just kind of took off from there.
yeah. That's awesome. So you did options kind of courses first, and then out of request, out of kind of feedback, you thought, you know, actually giving alerts would people are wanting that, people are desiring that.
Yeah, and I held out for probably 2 years before I even started that, because I was like, oh man, if I go down this rabbit hole, I'm like committed. Like,
Yeah,
people are going to be dependent upon me. So
yeah.
I held off for a couple of years, but then finally kind of gave in, and never looked back.
I believe it. Yeah, I mean, that is a. It's one thing to teach them. It's another thing, to where um, people, you know, uh, people are trading their own money, which is always a good segue. That my friend Matt, the other partner, always loves that I do this in the middle and not the beginning. But that reminds me, that's just a good point to say. Options involve risks. They're not suitable for all investors, and both for navigation trading and option omega. We're talking about things that are backward looking, not forward looking. So as always, consult with your financial advisor. This is for entertainment purposes only.
I know Matt is the
That being said,
compliance officer of your group.
he is definitely the compliance officer of our group, and that's why we are still in business, thanks to Matt. Uh, so you started doing the alerts and things like that, and then would you alert? Did you start with just condors, or did it kind of move at the same time, synthesize with other trades?
Well, by the time I started doing alerts, I had put out the class on iron condors and calendars, and I believe one or two other things. So it was like three or four different kind of basic strategies.
And so those strategies, um, can you? I mean, just because we're an options group, I'd love to just dig into some of those. So I looked through your website, and I know you do spreads, you do butterflies, you do everything. Um, with calendars, having being new, learning options as well. What did it look like when your kind of first calendar course? What did you going through that and having taught it? You always learn so much from teaching. What did you kind of take away after that first course? Once you started doing it regularly, what have you kind of figured out about calendars that
Yeah,
might
I
not
was
be?
I was doing a lot of longer duration stuff, putting it on with, 30 to 50 days in the front month, 60, 90 days in the back month. And, you know, it wasn't, I mean, there was a period there where I didn't trade a lot of calendars. They just weren't my favorite just because they moved so slow, right? Most of the juice started coming in the last couple of weeks, but I'd been sitting in it for 60 days, or
Oh, so
30
you're doing
days.
like you were doing 30, 60-day calendars.
Yeah. And
Gotcha.
so, and it was profitable, but I certainly, it was certainly a minimal amount of my allocation was going to calendars versus other strategies at that point. And then, um, when I really started digging in and doing shorter term stuff, then it kind of reinvigorated my interest in calendars. And, now they're one of my heaviest allocations as far as towards the different strategies that we trade.
What's the biggest thing, having been someone who taught longer dated calendars, did the alerts on the calendars and all those things? What is it, from a Greek standpoint or something like that? Has it changed kind of what I guess what I'm trying to ask is the fundamental style of trading? I always tell people shorter term calendars are almost kind of like delta more than theta. It's kind of a delta play. But have you noticed any changes between like a 30-60 when you're explaining it? How do you explain that difference to people?
Yeah, I mean, the way that I kind of position it is, I always tell people, you get some people who say, I just want to focus on one strategy. And that's a can be a good idea, right? You become a master instead of a, jack of all trades. But what I always like to see people do is be able to have a at least a handful, maybe, even two or three different strategies that you can utilize in different situations, and primarily speaking around implied volatility. Calendars are long vega, you get iron condors or short vega. And so, if what we like to do is we like to put on calendars on days when, like today, when implied volatility is contracting, um, and benefit from that, when it bumps back up. We like to sell premium when implied volatility is spiking and wait for that contraction. And so, being able to layer in with different strategies on different days or different weeks based on the environment, I think is important. So that would be one thing. It just, the way that they react to volatility compared to some of these other strategies. What you said as well, just, kind of the delta versus vega versus, theta kind of thing. But, and then, the other thing, and then obviously, within the last year with all these everyday expirations, I mean, that's just been a completely different deal now that you can utilize you know, the even shorter term, and you can have one day of duration between the front and the back. I mean, that's opened up a whole new can of worms.
For sure. Yeah. Have you had a lot of people when it I feel like it was almost kind of like a paradigm shift running services like you do and education like you do. Have you noticed the wave of people? Has there been a wave of people that are like 0 day? We want 0 day stuff.
I don't, I didn't, I wasn't doing much of that really
Yeah.
until I started getting into option omega.
Yeah.
I mean,
No.
I had done some, but it certainly wasn't something that I ever thought I would have any kind of focus on. And so, but as far as, people coming and talking about zero DTE, yeah, I mean, we have uh, a day trading where we stream every morning. I've got somebody on my team. His name is Dr. Chad Searcy. He runs that every morning for the first 60 to 90 minutes at the market open. And so that's obviously very short term. I mean, they're in and out within, I mean, they're only trading for an hour, so they're trying to capture some of that movement in the first hour of the market opening. And
Yeah.
and so our day trading crew, Yeah, there was definitely some talk about, why don't you do zero DTE, SPX, iron condors and spreads and that kind of stuff. And it just wasn't something that I trade a lot of different stuff. And so
Yeah.
it was more just a capacity issue of me trying to figure out, okay, what do I really want to focus on? And that just wasn't part of the game plan for a while.
No, I totally agree and understand. I mean, I think it's funny. I mean, we all come from different spaces and things like that, but I think newer traders, just because it is so frothy right now, and different groups and things like that, 0 days all the rage, that people assume perhaps that's the starting point, but 0 days actually much tougher in my mind. There's a lot more at play. There's a lot more things happening, and so I have a lot of respect for someone who just sits in and says like, I'm not going to just jump all my new people into 0 days. I think that's wise on your part and shows that you care in my mind, that you're not just jumping on the latest bandwagon of stuff, which there's definitely a bandwagon now of it.
Yeah,
So
and same thing with crypto, right? I mean, we had
yeah,
people
100%.
saying, "Oh, let's do all this with crypto." Nah, that's just, or when the meme stock started popping, people
Yeah.
wanted to have a channel that was all about YOLOs, and I was like, that's not really the message I'm trying to teach people. That's not how you make consistent profits trading, and that's not really the message I want to spread. So yeah, there's been several fads, and not that I think the zero DTE is a fad. It's certainly here to stay, but yeah, we definitely don't jump into things just because the Reddit folks are ready to roll.
Yeah. No, I totally understand. The one of the questions I had was about butterflies, because I know you trade a lot of calendars, and I know you do condors and things like that. And again, I mean, if you've never taken a course from navigation and you are continuing your option journey, I definitely would recommend it, just because he does a great job of explaining some real nuanced things, but he simplifies it in a really good way. So I know with the condors and things like that, I took a bunch of courses, read a bunch of books, and definitely loved your stuff the best. And uh, I've always wondered, when you look at a butterfly, what are kind of the market conditions you're looking for a butterfly, and what kind of butterfly? There's a million butterflies. So right now, I guess would be the question: what kind of butterflies are you doing? What are you looking for when you put them on? Things like that.
Yeah, so that was another one. I think it was iron condors, then calendars, then butterfly spreads. I think we're actually my first three now that you say that. But and so back then it was really just another way of trading a tight iron condor, right? It was just a traditional butterfly equidistance on both sides. Just hoping price stays in the range. That was my initial way to do it. But since then, I don't know if I've traded just a traditional butterfly as its own strategy in quite some time. So everything that I do in the butterfly world these days is all broken wing. And as far as getting into a trade, a lot of times, if I'm positioning it so there's little or no risk to the upside, usually I'm waiting for some type of a little bit of at least a little bit of a down move, at least a little bit of an implied volatility pop to put that on, try to get my break evens a little bit lower on the downside, and enter at that point. So I don't really look at any specific implied volatility level overall. It's more just what's happening at that time and does it make sense to put them on. And so I like to put them on days when implied volatility is popping and we're getting a little bit of downside in the market. And then the structure of it, that varies pretty widely too. I mean, I'm doing some broken wing butterflies and broken wing long condors, as far out as 90 days, 60 days, 50 days, and then also some shorter ones as well.
I gotcha. Yeah. So do you set it up as a broken wing depending on uh, I don't do you leg into them, or do you kind of set them the structure up all at once?
I like to set the structure up all at once based on what I'm trying to accomplish with that particular trade. And then
Got
and then I'll certainly make adjustments by adding other structures or moving the structure around as price and volatility move.
I gotcha. I think one of the things I remember early on, this was years ago, but I thought it was a genius move on your part. And since then, I think you've had some people do it along with you. I'm sure you probably weren't the first, but Tell me about the iron duck, the history of the iron duck. What is an iron duck?
Yeah, I have come across different people doing it or calling it different things, but I really didn't find it from anyone. I actually found it by accident. And what I mean by that is, I think I was probably setting up an iron condor and I accidentally put the strikes in weird. And so when I took it over to the risk profile graph, it looked like that. And I was like, oh,
Wait a
that's
second.
interesting. And then I just kind of from there I just started tweaking it and playing with it and testing it and back testing it, doing all that kind of stuff. And just kind of came up with the criteria that I use that I think performs the best over a large number of occurrences. And for those who don't know what it is, when you look at it on a risk profile graph, it's essentially a skewed broken wing iron condor. And so the risk profile graph kind of, to me, it looks like a duck. So
Yeah,
we
so
call it iron.
you're positive theta, and then as the life of the trade goes on, um, you actually get a little bit more positive gamma. It flips at a certain point, so you have a hedge, a natural kind of hedge range to the downside, while still being in a positive theta trade.
Troy, can I share my screen? I can kind of
Oh,
show one.
no, please, I would love it. Yeah, share that screen. I think you can share your screen. Let's see that.
All right, let me know if you can see my screen. You should be seeing my toss risk profile.
No, unless someone else is seeing it. I'm just saying. Oh, you see it? Oh, sweet. Oh, everybody sees it. Great. Everybody sees it but me, which is beautiful. Oh, I see it now. I'm in
You
it.
know what it
There
is.
we go. Yeah, we're good.
So this is what it looks like, and this is what I've been in for a few days. But so you can see here. Try to make this a little bit bigger. So essentially, we call this the duck beak. We've got the duck head, which is our max profit area. Prices run up on this one, so it's hanging out right here. But that's kind of what it looks like. So essentially, if price, we have no risk to the upside. So if price runs higher, we're going to book this what we call beak profit, which is typically anywhere from a 6 to 10 return on capital as far as from your buying power. But if price comes down and settles in this area, in the duck head area, then we might book close to max profit, which is typically around 27 to 32%, return on capital. And when we set these up, it's got a pretty high probability. Right now, if you look at the downside break even way down here, TOS is showing it's got over a 91% probability that it will be profitable at expiration. And when we set these up, it's typically around 85 or right around there. So it's a pretty high probability trade and some decent ROI as well. And as far as duration goes, I mean, I've traded these on 0 DTE. I've traded them on 2 and 3 and 7. But kind of my sweet spot where I really like to set these up is kind of in that 14 to 20 plus days to expiration.
Okay. And the criteria for these are
which ones are available. What are their names?
Oh.
Select the one you want. Copy to the desktop.
Someone's getting. Sorry, we're muting someone. There you go. Sorry about that. What's the criteria for putting those on? Are you kind of slapping these suckers on all the time, or is there kind of an entry point that you like to look for?
Yeah, similar to what I was talking about with the broken wing butterflies, is I'm usually just putting these on when we have down days and implied volatility is popping, gives you a little bit more credit, get your downside break even a little bit lower. And then I'm just layering into these in different symbols, in different durations over time, so that I'm always cycling in and cycling out of these things on a consistent basis. So I'll use, SPX, RUT, QQQ or NDX, and then we'll even do them on futures like oil and natural gas and some others from time to time. It's got to be a pretty, and on stocks too. We used to do it on Amazon a lot when it was a big stock. Unfortunately, there's not many big boys left after this drop in the stock split, so there's not a whole lot of stocks that are available. But it really needs to be a higher priced type symbol. It's got some premium in it.
Yeah, looking at that, I was just saying last year, woulda, shoulda, coulda, but oil future contracts, that would have been an interesting one. Just the way vol works in that on that pop last
Yep.
year, that would have been an awesome time to put a couple of these on and layer into them with oil. But that that's always struck with me. You were the first to kind of have that idea, like the hedge. And again, it's quite often just by mistake these things happen. That you look at something and you say, "Oh, that actually really would work." And I always tell people options. It's just so when things get so complex, you need both probabilities, but you also need a little art to it, and you need to think through it a little bit differently. So, what can you talk about the Hedgehog?
The Hedgehog, one of my new faves. Yeah. So again, we like to name our trades based on something that it kind of looks like on the risk profile graph, and just something that when I say it's a hedgehog, everybody in my community knows exactly what I'm talking about. So, and for some reason they end up being animals for some reason. So we got ducks and hedgehogs and butterflies and all that good stuff. But
zoo.
So, sorry, go ahead.
Just saying it's like a zoo. Dumb question. Dumb joke.
So a hedgehog essentially is where we're buying, and you can do them in both directions, but just for example, on the put side, where you're buying an out of the money put vertical, and then you're selling further duration short puts really far out of the money. And I'll show you an example of one. Let's see what I got. I've got a current one in QQQ, for example. And so this is kind of what it looks like on the risk profile graph. And so we call it the Hedgehog because it's got a downside hedge. So there's your hedge. And it kind of looks like Sonic the Hedgehog right here, at least in my mind.
I see it. I do see it.
That's the logic anyway. But essentially what you've got is a very high probability trade where as you get closer to expiration, that profit line is really going to pump up down here in the in the kind of the max peak profit area. But if it rips higher, you're gonna break even or make a little bit of money. You do have a little area here where you start to get some sag as you get closer to expiration, but we've got we can take it off before that happens and some different things. And so you've got a situation where you've got typically no risk to the upside. You've got a massive, profit to the downside, assuming it doesn't happen too quickly. And we have very strict criteria of how we manage these to reduce risk and different things like that. You are using naked options, so not to ignore it. I mean, there is absolute tail risk down here, but we've also, got ways to mitigate that as well. So that's the kind of the quick and dirty of it. The cool thing about these is a couple things. We've got the ability to our risk versus our potential reward on these can sometimes be 10 to 15x. So you've got a really good risk to reward that way. I mean, you'll have a lot of small winners, you'll have some tiny losers, and you'll have some monster winners. And so that's kind of the risk reward, risk profile of it. But the other thing is with that longer duration short put that we've got in place, if the market moves up, sometimes we can roll that up, collect, book a credit there. And then if it, continues to move up a little bit, we can just close that out. And then we have a free downside hedge.
Yeah.
So for example, here's one on ZB on the bonds that we already took off, booked a little bit of a profit on the trade, not much, but now we've got this free downside hedge that's got, max profit of over $3,300 on just a few contracts.
I mean, that's awesome. Yeah. Anytime you can lock in a hedge like that, I think that's definitely, probabilities are one thing, but then just that freedom of saying like, this is already paid for. We've paid for this hedge at this point.
Here's a reverse one in gold using calls. So you have this massive upside, profit potential, very little to no risk if gold turns around and goes down. And just to give you going back to QQQ as an example, because I think that's something that more people are going to trade rather than some of these commodities. But if you look at where this price slice is right here on the Qs, That's 12% below where price is currently trading. So price would have to make a 12% drop today, essentially, for me to start losing money on this trade.
Yeah.
So
Yeah.
we got a huge downside buffer before we would start losing money. And the longer you're in the trade, the further out that goes, and the more your profit hump starts to grow for that downside move potentially.
And like the iron duck, are you probably more willing to put these trades on down days?
Well, so that's what's interesting. When I first started trading it, it is a negative Vega trade, right? So you would think, okay, let's put these on when implied volatility is popping because it's negative Vega. But the reality is that shorter term vertical spread typically is going to decay quicker than the longer duration short options. And so the reality is we're actually better off putting these on days when implied volatility is contracting because of the vertical. And that's what we've found has worked significantly better.
Interesting. So just trying to think through when you set it up, what's your gamma profile look like?
So
or what's your starting point?
Yeah, if we hover over price on this one, and we've had this on for a little bit, but it's pretty. So the gamma is pretty flat. It's at 0.36 right now, but it's typically pretty flat.
Yeah, that's a wild one.
And you can see that. I mean, you can see just visually from this profit line how far it extends and how flat it really is.
Yeah. Yeah.
And then that gamma grows as you get closer to expiration, but in a good way.
Yeah. Yeah. Using kind of the shorter dated gamma to your benefit in that type of trade. That's a super interesting trade. I like that.
Yeah, it's being able to peel some of these off and have a free downside hedge. Then you got some of that just black swan hedge issue taken care of in your overall portfolio. Because we sell, I'm a fan of selling naked options, but I'm very aware of my position size and everything else. So, we also do short strangles and some other, uncovered options. And so I like having, some of that protection if things do get crazy as well.
Yeah, for sure. You also you do trend trading, and that's something that you don't see a lot with a lot of, at least the options education that I've seen. Talk a little bit about trend trading and how you got into it, and what do you look for in those things?
Yeah, most of what I do is premium selling, theta positive type trading. I don't do a whole lot of directional trading until I kind of came up with the trend trading program that I use. And it's just I definitely am not a programmer or coder, so I basically had somebody do this for me. But if you can see the screen here, this is what it kind of looks like on the charts. And basically, what it is if you guys listening are familiar with Heiken Ashi candles, it's just another type of way of looking at a chart. And so these are not traditional Heiken Ashi, but some of the same concepts apply. It's kind of a custom designed Heiken Ashi, I guess you could say. We call them our navigation trend candles, but it's just another way of looking at price action. Price action is what matters, right? And so it's just another way of looking at price action. It's a way to kind of help you stay in a trend longer and get you out, keep you in a trend longer, and have a very strict criteria for getting you out. And so basically what, I was trading this a lot with stocks and futures and, using options as well with just long options or vertical spreads and directional type strategies. And then I was like, man, there's really something to the way that this is working, because it's kind of just got a dynamic built-in risk versus reward metric to it. If you kind of follow, when we get in and when we get out. And so I'm trying to think, it was August. I'm just going to bring up the chart so you can kind of get a visual. So it was like right here, August, right around the middle of August, I opened up a new account. And I was just like, I'm just going to trade this with futures. And so August of 21, I opened the account and started trading. And within 11 months, I had tripled my account.
Oh, wow. Okay.
And so I was like, yeah, okay, there's something to this. And so I bring up this because I want to see you, I want to show you, here's what the Qs look like over that basically period that I did. But I wasn't trading just the Qs. I was trading futures. So I was trading the
Yeah.
S&P. Here's what that looked like. Pretty, not real trendy. I mean, certainly not like
Oh, sure.
that we've seen a few years ago. But I was also trading gold. Some decent trends kicked in
Yeah.
there. Silver, notes and bonds had some nice runs to the downside. The 10-year yield, of course, to the upside.
Wow.
Oil, natural
So
gas.
so interesting. And you just, I mean, that's the thing that's so intriguing to me about what you do is, you started with iron condors,
Well,
which is
and
years.
here's how simple. I mean, Troy. I think I'm a pretty simple guy. I'm not
Okay.
real complex. So literally, all I'm doing with this is if it's showing an uptrend, and this yellow line you see is the actual price. So if we're in an uptrend and price pulls back into a green candle, that I go long.
Okay.
If we are in a downtrend and price bounces up into a red trend candle, I go short.
Gotcha.
And then there's very specific criteria for scaling in and scaling out and closing
Sure.
out the trade and that kind of stuff. But it's really just buying the dip and selling the rip and using this specific criteria to do that. Now, on the flip side, I mean, that sounds great. Wow, you tripled your account in 11 months, but the last few months, my P&L has been pretty choppy.
Sure.
Reason being is the markets have been pretty choppy, right? If the markets are choppy, my P&L is choppy. If the markets are trending, my P&L is typically trending. So it's just kind of a
Yeah.
cool way to balance some of the other delta neutral and other option selling type strategies I'm doing.
For sure. Yeah. Yeah. We're trending nowhere right now, so that would make sense to me. Uh, what you've just done this for so many years now. I'm interested. Just we have a bunch of option traders on here. What are kind of some of the mistakes that you see, having taught for years, that you just keep seeing? Things that you're just like, guys, get it together. If you could teach a class on mistakes made, like what are some of those things?
Well, number one by far is position size. And I know nobody wants to hear it. And especially if you're in my community, you don't want to hear it again because it is like a horse that I have just beaten to death. But for me, when I finally realized that position size is actually the key to making money in this business, I was like, I can't believe I've been so stupid. Strategy is one thing. Managing money. I've seen people who just claim that their indicator is the best, but the reality is it's their money management around using that indicator.
100%.
You hear people say, well, technical analysis is BS. No, it's not. It's just, it gives you a criteria to use, but your risk management, your money management around that specific indicator or trend line or whatever it is what really matters. And so it's just over and over, it's position size, the way that you can get hurt. Of course you have to have a good strategy. Of course you have to have, a theoretical edge, but if you don't use correct position size, you're dead no matter what you're trading. So that's number one.
Yeah.
And risk management goes into that as well. The other thing is just, I think people take profits way too quickly. I see that over and over. There's very specific criteria to, maximize profits over time. If you're taking a long-term approach, right? If you're basing it off of many occurrences, not just this individual one trade, but so many people get such tunnel vision on that one trade that they're in because they're watching their P&L, and they'll, take profits too quickly. And if you're taking profits too quickly, then once you have a loss, those profits aren't going to be enough to make up for the loss that you took, because you typically either let the losses go too long, or if you're taking your losses when you're supposed to, the winners aren't making up for that. And so it kind of screws up the entire model of what you're trying to do. So profit taking and position size, I would say, are two big ones that I just see over and over and over.
That makes total sense to me. It I I had this thing happen a couple of years ago. I was going to tell you a funny little story about it. I think I took one of your alerts or one of your questions or things like that, and it was McDonald's, and it was a McDonald's, I think, call debit spread, and I was newer to options, and I wanted kind of the instant gratification. And I think it was like a 30-day like McDonald's call spread. It was something random, but you had a reason for it. And it was like 20 days in, and it was at break even or whatever. But and it finally hit. But I remember just thinking like, this guy has the patience that I don't have. And it just, again, it's a teaching element.
Yeah, and it's a learned skill for sure. I mean, trust me, I've made every mistake in the book, especially when it comes to position size. I mean, my worst trading moment was I can't remember when it was exactly, but it was I don't know, probably 10 or 12 years ago. Oil had a massive move. I was trading oil futures, and it everybody was saying it was trading at like 90, and everybody was saying it was going to go to 110, and then it started going down. And so I was so convinced that it was going up that I just kept averaging in with oil futures as it went down. And in the matter of a few weeks, I lost like $115,000, and I just had a deer in the headlights. And I mean, it wasn't a strategy. It was just a complete puke job on my part. And I mean, that was one time where I literally quit trading for a few months before realizing, just how stupid that was. So that's just an example of I've made every stupid mistake in the book. And so, my goal is to try to help people not make the same stupid mistakes that I've made over the years.
No, I get it. And I think, yeah, it takes maturity in trading. It takes all sorts of things to know when to take profit, when to let the profit run a little bit and things like that. So that's for sure good advice. We've gone a while and I don't want to keep you long, but a couple questions. What is, you have a podcast. Can you talk a little bit about your podcast?
Yeah, so it's called the Trade Hacker Mindset. That's kind of the theme. Our Discord community is called the Trade Hacker Community. And we just call it that just because, hacking is kind of a way of kind of copying or learning what other people are doing and making it better is kind of how we define hacking. So we are the Trade Hackers. That's our community. And we got the Trade Hacker podcast and the Trade Hacker Mindset podcast. And so that's all about the mental side of trading. So, I talked about position size. I talked about, having a good strategy is obviously important. But then for some reason, whenever we get into trades and we start getting emotional about our money, we start doing stupid things, and it's having that mental discipline to follow through with what you're supposed to do with the trade. And so I think the mental side of trading is underserved and underutilized. I don't think it gets enough attention. And so I started a podcast that I put out once a week, which, speaking of, I got to get on that for next week's. But yeah, I just think the mindset, the mental part, the emotional control, all that part of trading is such a big part that's what that's all the podcast is focused on.
That's awesome, man. Last thing, I appreciate you being on and being the inaugural kind of teacher on here. So thank you so much for taking time to be with us. And how can people hear more about navigation trading, learn what you do, jump into some courses? How could they do that?
Yeah, just go to, I'm the worst marketer in the world, but if you just go to navigationtrading.com, you can click around there at the top. There's a product or a pricing button. You can click on that, and that just shows our different memberships. Our kind of our main deal is called the Pro membership, and that just gives you access to everything. So it's not something that we are going to, you're going to get in for a low price course and then we're going to try to upsell you into some $10,000 coaching program or anything like that. I mean, right. We just have a couple basic things. We've got our pro membership, which gives you access to absolutely everything, all the trades we do, all the strategies that we teach, everything. And then if somebody's not ready for that, if they just want to focus on like one strategy, we have some individual memberships. So if you just want to focus on calendars, or if you just want to focus on the trend trading, or I think we have 4 or 5 or 6 of those. If you just want to focus on those, and those are all included with the pro membership as well. We also have a free membership which includes, I think, 5 or 6 just kind of options basics course, like an basic iron Condor, basic calendar, some other ones in there as well. So we just kind of, everything that we do, if we come out with something new, and we just kind of include it with the membership. So that's how we roll.
No, that's awesome. Yeah, that's generous too. I appreciate that you kind of just, to the point, you just roll with as you're learning, and your members are your members. So, but then also you can take courses and things like that. So I don't want to just, I've just completely dictated the space. Have I missed anything? Is there anything you want to say, or anything you want to point out to that I didn't ask about, or anything like that?
No, I don't think so. I mean, it's really cool what you guys are doing with Option Omega, and I've spent some time in your community as well. And just the cool thing about trading is you never stop learning. And I'm definitely a person who knows. I hope people don't ever think that I'm a know-it-all, because I certainly don't. And the fact that I've been doing this for 20 plus years, and I've learned in the last 6 months, I've learned a ton, with the new 0 DTE, with everyday options expiring, with the different ways that, calendars and different strategies can be traded now. It's such a fun thing. Like I every day I kind of pinch myself. I'm like, I can't believe this is what I get to do for a living. So fun stuff. I'm glad that we connected, Troy, and I'll be spending more time in your community. We've also, got a Discord community as well that folks are welcome to jump in anytime they want as well.
No, I appreciate it, Steve. Yeah, and they have a great Discord too. So, this is Discord world right now. So everyone has Discords, and some are not good, and some of them are really good. And he has a really good one. So feel free to jump in there as well. And I can't thank you enough. And we'll definitely do this again. And it's the first time ever doing anything, so hopefully we get better as we go. So I'll ask you better questions next time for sure, because I know you've got some really good answers as you did today. So
that's great, Troy. That's good.
Thanks so much for taking the time, guys. And we're going to actually have 2 cigar lounges next week. So we'll shout out more to that. But again, say thanks to Steve, and he's awesome, and jump in the Discord and take some courses. So I appreciate you guys taking time today.
Thanks, guys. Good to be here. Take care.
Talk to you soon. Bye.